What's going on, everybody? Welcome back to the channel, and in today's video I want to talk to you guys about how you can get started day trading.
You be ferocious. You be relentless.
I know if you follow this page, more than likely you may be familiar with day trading, but you've been too scared to jump in. And that's for many reasons. Maybe you just don't know where to start. Maybe you just don't know how much money you should put in. And there's just a lot of questions that can be very intimidating as a beginner. I'm going to make a really small series, which is probably going to be around 3 videos or so, explaining to you guys how you can get started day trading today. So make sure you watch this whole video, especially if you're a beginner. And even if you're a more advanced trader, there's a whole lot of tips I'm going to be sharing with you guys that could take your trading to the next level. So make sure you grab a notebook, write down some notes, and let's get you started in your journey as a day trader. So first and foremost, let's talk about what even is day trading. It is much different than long-term investing that you may be familiar with. As a day trader, your goal is to buy a certain stock or asset and sell it within the same day for a profit. Of course, there's going to be some risks associated with that, but the main reason of a day trader is to make an income and make more money faster rather than a long-term investor, which they just buy and hold. So the overall goal is to make money and to make money quick. Of course, that comes with a whole lot of risks associated with it. Because anytime you have greater rewards, there's definitely going to be a lot of risks there. The risk of a day trader, of course, is that if the stock or the trade doesn't go your way and goes the opposite way, you're going to be losing money. So you could be losing money much faster if you were just long-term investing and just holding. Your overall goal as a day trader is to find a strategy that consistently ends up making money day in and day out. Of course, it doesn't have to be perfect, but on long term, it does need to be more profitable than not. Now, the next question is, how can you get started day trading? What program do you even need to use? Do you need a laptop? Do you need 2 screens? You might be seeing those videos that people have 4 to 6 screens. And let me tell you guys, you more than likely just need a laptop. You can also trade with your phone, which I do not recommend to solely trade on your phone because you just don't have enough information on there. But just a regular laptop is fine. For example, I trade with a MacBook Air most days. I even sometimes drive to a coffee shop and trade from there. I don't feel the need of using 2 to 3 screens. I used to do that, but honestly, the more as I've learned as a trader, that a lot of times less is more and multiple screens is not needed. So as long as you have a decent laptop that runs any basic software, it really should be fine. Now, you can also use your phone for apps to manage positions, look at news, or join our Discord, which the link will be in the bio if you don't want to follow all my trades. Now, let's talk about a broker. A broker is a must, as you need somewhere to be able to buy and sell your shares. A broker is pretty much your platform that you're going to be using to execute your trades. Now, brokers, there's tons out there. Some are great, some are not so great. Now, let me start off with the easy one. What do I use as my broker? My personal broker is Thinkorswim. Doesn't mean that they're the best. It's just the ones that I've used. I've had no issue with them. I've been using them for over 7 years now. Another great broker is MooMoo. They offer up to 15 free stocks. This broker is completely free to use and is a really great option. It is a newer broker, which makes it very user-friendly for new traders, and it gives you great feels. If you're interested in checking out MooMoo, the link will be down below. Of course, Robinhood is another one. Not as great, but they are getting better. If you want to get your feet wet, go ahead and use Robinhood. Now, if you do all those brokers I just mentioned are only based out of the US, what do you do if you're not based out of the US? Broker that is more likely you're going to be using is Interactive Broker, a great platform for either the US people. That means if you're in Canada, Europe, Asia, anywhere like that, feel free to use Interactive Brokers. Now, a great one will be TradeZero. Some people don't like it, but I do think it's a great option if you're out of the US. Now, if you want to find a more specific broker for your country, feel free to use Google and find out which broker is best for you. Now, let's talk about how do we find a strategy, right? I'm a technical analysis trader. What does that mean? There's a technical analysis and there's fundamental analysis. Technical analysis means I believe on reading charts and looking for technical patterns. That comes using candlesticks. While some people think that's complete horseshit and think that has no relevancy while trading, they might be fundamentals trader, which means they only use news to choose their position. Now, I think news are always late. By the time you see something in the news, I just think that has already been priced in. So for me, what I've been successful with my 7 years of trading experience is technical analysis. Now, as a technical trader, there's hundreds and hundreds of strategies out there, but it always comes down to the same basic concepts, which we'll be touching on today's video. So let's talk about candlesticks. What is a candlestick? A candlestick is a representation of where the price has been in a certain period of time. When you're looking at a candlestick, it can change from time frame. If you have a 1 minute time frame set on your broker, each candlestick will indicate how much has the price moved in that one period of time. Then you can set that to different time frames. You can have a 5-minute time frame, a 1-day time frame, a 1-week time frame, which means every single candlestick is a 1 week worth of time. Now you can change that with your broker, and you can set to any time frame that you want. But the candlesticks will always have the same components. You're gonna have a green candlestick, a red candlestick, and on a very rare occasion you're gonna have a white candlestick. A green candlestick is mean that within the price has gone up from when the candlestick opened to where this candlestick closed. While a red candlestick would mean the price has gone down from where it opened to where it closed. And a white candlestick means the price has gone nowhere from open to close. So there's a candlestick that means it's undecided. It hasn't gone anywhere, the price. The price has stayed completely flat. Now the components of a candlestick are the same. You're going to have the open price, which is the very start of where the price has started. You're going to have the close price, which is the very top at where the candlestick has ended. You're going to have a wick, which is where the price has navigated to, which is going up to a level, but it just didn't close to that level. And you're going to have the body candlestick, which is that big, bulky part of it. It is where the price has ended overall. Now we understand how candlesticks works, and we have a basic understanding on how to even just read the price levels. You know, where is the stock going? Is it going up? Is it going down? Now let's talk about the wins and the losses that come with trading. So you have to understand, as a day trader, you're going to be taking losses. So you cannot be emotional, and you have to be a good sport at losing. Now, are you going to lose your temper sometimes? Are you going to get upset sometimes? Of course, that just happens. But as a day trader, we have to understand before we even go into it that we're not always going to be winning. There's going to be some days that you might be taking a bad trade. Or maybe the trade wasn't even bad, it just didn't go your way. There was some crazy news that happened, went the opposite way of yours, and you have to respect your stop losses. Which brings me to the next topic. Setting a stop loss, entry target, and profit targets. These are 3 words you need to become very familiar with. As the day traders, we always have a plan. You need to learn how to build a plan. Building a plan is very simple. Understanding where your entry target is, so what is going to trigger an entry to a trade? Why am I going to enter a trade? Is it a certain price that I've hit? Is it a certain level that we crossed? All those are major factors. And once you set an entry, you can't just enter and be like, well, I'm just going to wait and see where the stock goes up or down. I'm not sure. You're going to have to be disciplined. You're going to have to decide profit targets. They can be a percent. Maybe if the stock goes up 1% and you put in $1,000, you're happy with that 1% trade. You're happy with a 1% gain. Maybe it's 2%. But now you're going to have to adjust your stop loss based on that. For me personally, I do not use an ordinary percent number just because every trade is different. Rather, I use a certain level on a chart. A level where I think if the price hits that, there's a potential the stock may be going opposite way. Out of the trade, I'm in my money and I'm out of there. Now, before you enter, you have to understand your profit target. And once you've established your profit target, you have to have a stop loss that's appropriate. For example, you can't have a stop loss that's more than your profit target, because if the stock goes against you, you're going to be losing more than what you potentially could have made. And that has bad risk management. Risk management is really big for traders, which is how much are you risking, which how much is your reward. So you should always be looking for a risk management of at least 1 to 1.5, which means your reward is 50% more than your loss. As a beginner trader, this is a really important concept because you have to understand that the number one thing to grow an account, especially a small account, which many beginner traders will have, because you have to start with a small account to just learn how trading works, is you have to contain your losses. It's all about taking little losses and getting big wins, because maybe you take 3 red losses because you didn't have the right plan, but if they're small, let's say they're within $10 to $20, and finally when you finally catch a good trade, a trade that you were confident in and you actually took in a positive manner, you make $100. Now all those $3 are offset by just 1 win, and that's a really, really big deal. Now let's take a step back and understand how a trade works again, right? To make a trade that's going to make you money, you have to buy a stock. And now you're taking a long position in stock, you're betting if the stock goes up, you're going to make money. Example, you buy Apple for $150, and within an hour, it goes up to $155, you then have made $5. Now the action of buying and selling will tell the broker that you are a day trader. So if you're in the US, you will be subject to a pattern day trader rule, which all it means is if your account is under $25,000, you're limited to 3 day trades within a 5-day trading period, which means whenever the market is open, which is Monday to Friday, and some holidays out there when the market is closed don't count. So if you're in the US, how can you get around that? You're gonna be saying, hey Antonio, I only have $1,000 to invest, right? I have a small account, and you should be starting with a small account, so don't feel bad about that at all. How can I get around this PDT rule, right? If I can only take 3-day trades a week, I can't really become a day trader. I take one that's red, I only have 2, and maybe I can't trade for the rest of the day. Well, you have a couple options about that. My number one advice for you will be change your account, call up your brokers. All brokers do this. Tell them, can I please switch my account to a cash account? I don't want to be in a margin account. Automatically, when you set up a broker, you're going to be on a margin account. And with margin, it means you can borrow money. So you see $1,000, you can borrow money from your broker to actually trade with $2,000, $3,000. Now, for many reasons, that's not good, not just for the pattern day trader rule, but also for the fact that you could be leveraging money you don't actually have, and you could be losing them. So for many rules, it actually is beneficial to switch to a cash account. Now, as a cash account, you can take as many day trades as you like. The one drawback is that you have to wait for that money to settle into your account. So let's say you trade with $100. You spend $100 on a Monday because you day traded. Now on Tuesday, $100 won't be available because it needs to settle into your account. But on Wednesday, it'll be available again, and you can use that $100 again. You can kind of rinse and repeat that. So the cash account will be the way I would do it if I was starting into day trading. Another option out there is to set up multiple brokers. That's not illegal. That's not crazy. So let's say you have $1,000. You set up one account on Thinkorswim, one account on MooMoo. You split the money $500, $500, and now you can have them both under PDT rule, and now you have 3-6 trades. Or maybe you can get a third broker like Webull, and you have 3, 6, 9 day tradings. Now the nice thing is if you're not out of the US, you actually do not have that rule. If you're out of the US, don't worry about it, trade as much as you want. But now what you're gonna have is fees, which for the US, most US brokers don't have fees, or if they do, they're really, really small. All the US brokers have usually much higher fees, like Interactive Brokers trade 0. So you won't have the pattern day trading rule. That's going to be holding you back, but you're going to have some fees associated with your trading, which again won't be massive, but if you're trading with a very small amount of money, they could be adding up. This is going to conclude the first video of this small series. I know it's a ton of information and a lot of information can be confusing. So make sure you go back and you rewatch some parts. Now the homework that I want you to do before you watch the next video is go down below, go download MooMoo, set up your broker so that you're ready for the next video. In the next video, we'll be talking about how to find the right strategy for you, how to pick a strategy that's winning overall, and we'll actually be sharing some tips and some of the strategies that I use that helps me on becoming a successful day trader and how I make a ton of money. So I hope you guys all enjoyed this video, and I'll see you guys in the next one. Peace.